Welcome back. Warren Alcon here, and this is the second part to understanding support and resistance. Today, we're going to be going over the use of dynamic trend lines and how they help us define chart patterns. As you probably remember from before, dynamic support and resistance is not usually horizontal, and it can move as price action within the chart moves. Today, we're going to be going over the basics of trend lines and chart patterns and how I use them. So when working with charts, you're going to be using trend lines all the time, and they're really simple to plot and understand. So we're going to get you ready to use the trend line tool, which is right here, to plot out our areas. So let's get a basic setup going. Draw out a line anywhere on your chart and then click it to set it in. We're going to edit this out for dynamic support and resistance levels. So just click on it, and up here on this taskbar, I like to change the color to yellow so it's highly visible, 2 pixels, and a dotted line. So I use this for everyday trend lines and my dynamic support and resistance. And the basic rules are the same. We use the trend lines in the same way that we use horizontal support and resistance lines. The main difference is that they don't always have to be horizontal. We just look for 2 or more touches on an angle to make it valid. And you can use, obviously again, swing highs and swing lows. Now these can make up chart patterns. And in your trading career, you're going to be definitely coming across a lot of them. And today, we're going to quickly go over some of the main types that you need to be familiar with, which are triangles, wedges, flags, and channels. Now, to assist in evaluating chart patterns, traders a lot of times will commonly use volume indicators. As price action reacts to the pattern's dynamic support and resistance lines, you can keep an eye out on volume to see if you can spot any triggers. And of course, remember the volume notes from class 2. First up, triangles. Triangle patterns fall under the continuation pattern category. In theory, once identified, they can possibly signal a trend continuation after a slight stall in price action. The 3 types of triangles we'll be going over are ascending, descending, and symmetrical. Ascending triangles form when price is ascending. It's characterized by a horizontal upper trend line with a rising lower support line. Price is expected to continue upwards because the lower line shows a series of higher lows. Next, descending triangles. They form when price is descending. It's characterized by a horizontal lower trend line with a descending resistance line. Price is expected to continue to go down because the upper line shows a series of lower highs. Now, as you can probably guess, these 2 types of triangle patterns can hold more value if they're forming with a major area of support or resistance, especially at the weekly time frames. Now we have symmetrical triangles. Now, these are pretty much a wild card playing off a market choice. They can occur in uptrends or downtrends. They're characterized by 2 slanted trend lines that are converging. They don't give us any prediction of where price is going to go. So when you identify a triangle pattern, I seriously just wait for the breakout on the high or the low, and I match it up with my volume, and I just wait to see where the pullback's at for any possible entry position. So moving on from here, you'll see that triangles are a little similar to wedges and flags and can either be a continuation pattern if it's validated or a pretty strong reversal pattern in the event of price failure. All right, now we have wedges. They are sometimes a reliable pattern for spotting reversals under the right conditions. So these patterns form when the highs and lows follow the same exact trend. So neither line is going to be horizontal, and the 2 lines are going to be converging or slanted towards each other as price action continues. The pattern prediction can be backed up by looking for declining volume, and the reversal is confirmed or rejected through trend line break and then a pullback test. There are two different wedges you're going to encounter, rising and falling. So with rising, price is expected to drop, but as you can see here, doesn't always happen. Falling wedges, price is expected to rise, which happened here, but not here. Next up, we have flags. Flags are usually short term, about 1 to 4 weeks, or about 20 days worth of bar patterns. So we look for these patterns on lower time frames, daily and intraday. They're a quick counter trend consolidation pattern, which means they move in the opposite direction of the major trend. So a bearish flag is formed in a downtrend. It has an upward slant, and price is expected to continue down. A bullish flag is formed in just the opposite. It's going to be formed in an uptrend and has a downward slant. You could probably find a bullish flag on the hour or intraday here as well. It has a downward slant, and price is expected to continue on the upside. So they are formed similar to wedges, but don't have any converging pattern. What I do is I always look for a breakout and try to confirm with volume. As you can see here, there is a decrease in volume through the breakout. Even though we saw a higher high in the price range here, volume tapered off. It was a good indicator that we were losing momentum from the bullish side, continuing down to the bears. Finally, we have channels. Channel patterns are usually long-term continuation patterns holding for a minimum of 4 weeks or more. There are 3 different types of channel patterns that you're going to encounter while analyzing charts. You have horizontal, ascending, and descending. And no matter what direction the channel is heading, the breakout could determine the trend. So these patterns are really simple. For them to be valid, they only need 4 touches minimum, meaning 2 upper and 2 lower. But of course, the more the better. Now, here we're going to cover horizontal channel patterns. For ascending and descending channels, their philosophy is almost identical. Horizontal patterns are valuable because they usually occur during phases of accumulation or distribution. On the weekly, you can really take advantage of the large price swings, moving in and out of both long and short positions with lower risk. On the lower time frames, you can sometimes scalp your way through the higher risk trend changes when you get a little bit more experience. But what needs to be focused on is that each time price action reaches an area of static or dynamic support and resistance, look into lower time frames and see if there are any signs of a trend reversal or continuation. Okay, let's look at some examples on the charts. Here we have Litecoin on the weekly time frame. And I've been tracking this for a while now, and you can see within the past 16 months or so, there have been about 5 identifiable channel patterns. So let me just walk you through them real quick. Now, moving down into the daily time frame, we can see price action a little more clearly. So we're looking back to June 2022, and here we have our first channel pattern. And these, of course, are easy, 4 touches to be valid, 2 upper and 2 lower. So as you can see, price volleyed pretty well between these 2 areas for almost 5 months. We saw a breakout, and then price stalled, only for about 20 days. But if you caught it, you'd really be able to scalp trade your way through the intraday timeframes pretty well. Price took a turn downwards and then started moving upwards. Then you had your ascending channel pattern form here. It went right into another horizontal channel pattern and had about 8 months of really healthy price swings, except for this false breakout right up here, but don't worry about those just yet. But as you can see, we've been in another channel pattern since around August. So we had a little bit of a breakout right here, a little bit of a red candle there. So where's price gonna go from here? So you probably noticed that I kind of went over these patterns really quick and with basic theory. That's because when you first start learning to chart patterns, you don't need to overthink it and get confused with too much theory. Because most people, when learning about these chart patterns, they tend to overvalue their initial meaning and see them as absolutions. So then pretty much how we use them as a beginner is when I approach chart patterns, instead of making grand projections of where price will go in 6 months, I keep it to simple theory and let the market really just show its hand. So I go back to my basics. I don't really care where price is expected to go, especially on the monthly or the weekly time frame, and sometimes even on the daily. I really try to react to what price action is doing right now and to make an assessment based off of what trading approach I'm going to take. So we're going to go in through here. So on the weekly, we just got a general. On the daily, we're in this little pattern right here because Bitcoin just really had a nice run. But where's it going to go from here? On the hourly, I can pretty much see an identifiable chart pattern. From right here, I think this is going to be a symmetrical triangle. So when you see price reacting to our static and dynamic levels, we wait for a breakout and then a pullback. And then we can confirm our entry with multiple time frame confluence. And my price predictions only really sometimes go as far out as I'm willing to trade to take profit. Because once my goal is accomplished, I take profits and then I reanalyze my charts for the next position that I'm going to take. Okay, and as you can probably guess already, I'm extremely adamant about understanding price action and understanding how all of this moves within a chart. Because if you thoroughly can explain what price action is doing right now, along with what it's done in the past, and then how it got to this moment, any so-called projections that are made aren't worth anything. Especially when you get those people that literally try to rely entirely off of indicators. And they're just kind of looking at everything and they're trying to use these indicators to make a decision, but they don't understand exactly what are these candlesticks doing? What is price action doing to get to this point? So a lot of times their projections are based off of what indicators tell them to do, but they don't really understand what the ins and outs can be behind that. Hopefully by now, as you can see, with just a basic understanding of price action, along with chart pattern theory, we can really get a sense of the big goal. And that big goal is to be able to identify trend continuation and reversals just by understanding how price action moves through the chart on different time frames. And before we move on, what else is a nice big goal? Hitting the like, subscribe, and share buttons just to help support the channel. You know, I'm a one-person operation, and these things, they do take a little while. But I appreciate anybody just watching these videos and helping me out by asking questions and commenting in the section below. All right, so here's some homework for you. Let's get some dynamic support and resistance lines drawn out on your top 10. So we're going to start with, the weekly, then move down to the daily, then the hourly, to see if you can spot any of those patterns that we looked at today. Especially take note if they're nearing areas of support or resistance. And just like last class, just keep up with news and social media to help you spot any trigger events. And we're going to go through it real quick, like for Bitcoin right here. We quickly identified a real easy channel pattern. It's been ascending. We're seeing price action react to this area of resistance and this area of support with our channel. In the hourly time frame, you can recently see it's formed another horizontal channel pattern. So we can kind of just keep an eye on this area right here. It's really important. Now, for this time, just to have a little bit of fun, I encourage you, let's check things out on the 5-minute time frame. So just go down to here, go to 5 minutes, reset your chart. Now you can see what other pattern can we see here. And just like that, we just have a real quick ascending triangle. Price did react to it, and now it's starting to float around this area right here. Now, when it comes to the lower time frames, like I said, don't get stuck down here because price action at this level is very volatile. The swings can move pretty erratically, but not always in your favor. Now, in just a small channel pattern that we identified here, we're really only getting a 1% price movement. That's why in the beginning, I really don't want you down here too much, because if you were to put $100 into Bitcoin and play off of the 5-minute time frame, you're really only looking at maybe a 1% price swing if you're lucky. And if you're looking at withdrawal fees, it's not going to really be the profit margins that you're looking at, and you can liquidate yourself really fast because your trading fees are really going to outweigh any small portion that you get. At the lower time frames, you really want to be positioning, in my opinion, about $10,000 or more to really scalp your way through a position. And now that we're finishing up with channel patterns, that is also going to add one more step to our Confluence checklist, which is price action reacting to areas of support and resistance, trend lines, and chart patterns. All of this through multiple time frames. And see if you can make any calls on where you think price action is going to go within the next few days. Don't worry about the next few months. Keep it within a realistic trading time frame. And before we finish up, here's a quick tip. When I'm going through all my charts, you notice I have a lot going on with my indicators and trend lines, and it kind of seems like they make a big mess. But actually, all of these notes, everything I do, can really hold some relevance into the future. As you can see here, I identified a head and shoulders pattern. A slanted neck went down, which actually was an area of the break for the rise of Bitcoin's price way back in January. So instead of just keeping everything here, you go over to this little object tree, and anything you have here, you can hide it and bring it back only when you need it. It keeps things really clean, and it keeps your charts just nicely organized. And you can rename any of your trend lines, any of your patterns, just so it suits you and keeps your head in the right place. All right. Hope you enjoyed this episode. See you next time.